In this video, we'll use the volume profile indicator to get better entries for our trades. This is a really simple trading strategy. Firstly, we're going to determine the trend. Are we in an uptrend or a downtrend? Secondly, we're going to use the volume profile indicator to show us where most of the trade is. And then thirdly, we're going to use that to place our trades in a better area than the majority of traders. I'll go through that in this video, timestamps down below. The first part of this strategy is to determine the trend of the asset that you're trading. This is so vital, especially when trading short term. We need to understand the trend that we're in, and then we can actually get better trade entries for ourselves. So I've got the Bitcoin price here, and this is a moment in time. And you can see that we are generally in an uptrend here. The price is rising. You get higher highs and higher lows. You do get consolidations and drawdowns, but after those, you do get legs higher. That's a clear uptrend, right? We can also use moving averages. So if you want to use these indicators on TradingView, just a simple moving average, we can see here that the price is coming into its moving average, but generally bouncing off that to the upside. So you get these consolidations and these drawdowns within the trend, and then you get the next leg higher. That is an uptrend. So how do we trade that? We want to trade these pullbacks and we want to trade these consolidations because our analysis shows that we're in an uptrend. So they are better entry points for us. So determine that we're in an uptrend, that's number one, and then we can go ahead and use the volume profile. What exactly is the volume profile? What is it teaching us and how can we use it? It's really simple. It just shows the amount of volume traded at the price range that you want to look at. Now, why is that important? Where most people trade is an important price level, right? Especially with an uptrend. So we've determined that we're in an uptrend, and now we go ahead and use the volume profile to show us where the most people have traded. And that's really great information for us to make our trades as well. So we're going to go to indicators and then just go volume profile. Like I said, TradingView is free, so go ahead and use it. I will link it below. The paid version gets you way more indicators, but you can use the free version. But again, I'm going to go to volume profile. I'm actually going to use the fixed range here. You can use visible range, but when you move the chart, everything that's visible then gets calculated in the volume profile indicator. I don't want that. I want to use a fixed range so that we can see exactly what we want to see. So I'm going to click fixed range here, then click X out. Now what we're going to do is look at these consolidations and pullbacks. So what are consolidations and pullbacks in the trend? We know the trend is to the upside. Where we get these consolidations, where the price actually moves sideways over a period of time, that's where we want to look at. So from this consolidation, like this is an important area and it's going to calculate that for me. This is a consolidation area that we're going to look at, and then we can make our trades around that. I'm also going to do this 2 more times at the areas where we get consolidation. So this area right here is a big consolidation. So I'm just going to trade this like this. And then we're going to do that a 3rd time on the most recent consolidation, which is around about here, like this, all of this. So now we have 3 areas of consolidation, and you can see the volume traded in each of these areas. Here's exactly how we're using the volume profile in this strategy. What happens in bull markets and uptrends is you get big moves to the upside, and a lot of people FOMO in and get excited about making money chasing the price higher. Then after those people are in and they push the price up a little bit too high, the price draws down and consolidates. That is an uptrend, right? Higher highs, higher lows. We want to make sure that if we're trading actively, we want to be confident to get in at those higher lows, waiting for the next upside. Yes, you can get in at a higher high, but then you're going to have a drawdown on your hands. So we want to time and go in on these drawdowns. And so how can we identify those? Well, you can take percentages. So this is Bitcoin drawdowns. You can see that in bull markets, you get 20%, 25% drawdowns regularly. Now you can just say, well, every time there's a 25% drawdown, maybe I'll buy some and wait for the next tick higher. But you can also use a volume profile here. This is showing us exactly what's happening. So we do have a start of the bull market as prices move higher. People get in at this price level. So we trade a lot here, right? So this is a high in this bull market. If we can trade anywhere under here, where most traders are actually feeling a bit of pain, then that's great for us. So think what's happening here. In the real world, we're getting this information. Traders have come in, they've got excited, and they've bought a load of BTC around this 27, 28 mark. If we get a drawdown from that, what happens is those people that got in that feel like they want to make money, they start capitulating when the price draws down around 10, 12%, because they're in a loss now, right? They got in and now they're showing a loss. So they're a 12% loss or 15% loss, something like that. If we can see that that's where most people got in, then we can try and buy some dips underneath that as some of those get scared and capitulate. And we can try and buy that. Now, if we're, let's say the high is here and we've drawn down from this area around 15% or so, right? And that's from the high. We know that in a bull market, you maybe get regular 20% drawdowns. So if we get in at these levels for a short-term trade, anywhere on this bottom side, you can see where the volume is coming down. What does that show us? It shows us that these people that got excited are starting to get a little bit scared and pulling back a little bit. Now that's when we identify the uptrend, that's when we can get better entries. So if we put a long position in here, and we know that from a range high, it can easily draw down 20, 25%, we can put stop losses in around that level, right? If you want to day trade, you can put stop losses in. If you're just literally dollar cost averaging and get better entries for your trades, you don't need stop losses, right? If you're investing, you can just buy here and wait. But you can see how we're using what we know about the market to actually get much better trade entry. We're not FOMOing up here. We're not wanting to make money at highs. We're waiting for them to get scared and capitulate, then go in, and we can have a much tighter stop loss for our trades because we know that during a drawdown, it could easily be 20, 25% normally, right? Which would be around this level for a stop loss, which is fine for us. But our stop loss is obviously much smaller because we're waiting for that FOMO to disperse and get better entries for our trades. You can also see this example. And again, it's a similar thing where you get a range high up here. So we have that range high, and from that range high, the drawdown was 22%. So again, another 22% drawdown. So people FOMO in, they want to make money. They see the prices rising. We're in a big uptrend here, right? And so people are saying, like, I want to get this. Now, again, if you're dollar cost averaging and you're just accumulating Bitcoin or the other asset, that's for your investment portfolio. The trading part of our portfolio is much more active, and we have to wait for those pullbacks. So they get excited, they get in, and then there's a pullback like this. We can also see from the volume profile, loads of people are in at this level, and they're short-term traders, and they're just being drawn down on. Some of them get scared, some of them capitulate, they take that small loss, that's where we get in. So it's not where the herd gets in. It's not where the herd gets in and places their level. We wait, if we're actively trading, to where some of them capitulate because we know the longer term trend is there. So we wait for capitulation. Yes, you could easily just do that on percentage drawdowns. Every time there's a 20% drawdown or a 25% drawdown, I just buy some because it's a 20% drawdown in a bull market. That's simple as well. The volume profile just adds to it. Let's go into this consolidation as well. A massive long consolidation, but again, lots of people getting in at this level, lots of traders saying, I want to trade the next move higher. And you can see that you do get opportunities where some of them capitulate, where they've got in, they've gone a bit too long, they've gone in with too much, they're excited, and they're getting drawn down on because that's what happens in bull markets. We can actually use these areas with our analysis to say, we are now drawing down from the all-time high or the previous range high. That's a 25% drawdown, very similar to previous drawdowns. We can wait for that. We can see that we are in the minority. Remember, the majority and the herd never make money. It's only the minority that do. We need to be in that minority, waiting for those drawdowns, being patient. So that's what the volume profile can actually help us do as well, is show us areas where the minority are trading, where we draw down. As long as we have that info. We know we're in a bull market, we know we're in an uptrend, we've seen that longer time frame or the higher time frame analysis. Now for our trading portfolio, we can be very picky about exactly where we're trading. We can wait, we can be patient, and we can use the volume profile to actually show us where the minority are trading and where the majority are trading. Now we can use the volume profile to give us some specific trade entries, an entry, a stop loss, and a potential take profit. So we're going to use this consolidation as an example here, and you get the range high, you get a drawdown, and then from here, a little bit of a recovery. You can see the volume profile is showing us that the majority of trade is around this 43 level, 44. And as we come down, those traders who got in hoping to make money are starting to capitulate. They don't want to trade, they're a little bit nervous, so we want to get in around this level. So we can also see from this range high that this is around a 22% drawdown, which is very typical in a bull market. So we're never going to trade the bottom tick. That's impossible. But let's say we got a decent trade here at around 41K. So we entered around that level, and the stop loss would be somewhere around this previous resistance. But we know that 25% drawdowns are very common in bull markets. So we can put our stop loss somewhere around that, right? 23% in this example. So somewhere around there, that would be a stop loss. Now take profit, you'd look at, somewhere going towards the range high again, something like that, right? So that would be a good risk reward. That would be a good profit ratio. You can see now trading short term, you would have taken your profits there and that would be a decent trade. However, you can see the price then moves on a lot higher. So you missed out on a lot of profits. That's trading short term. Don't miss out on profits. Have a long-term portfolio where you're investing in assets that go up over the long term. Have that. This is for your trading portfolio where you made a decent profit, could have made more, you didn't because you took profits early. That's trading. That's the way it is. We've got this trade and we've got the entries, so we can now put this in. So go over to our trading system. We're going to enter a long at 41,000 and you put your stop loss in, because trading, when you are day trading, especially with futures or anything, you need a stop loss. So we're going to put our stop loss in there. And the trigger price 38,000, so we can put that in like that, press confirm and enter your order. You have the entry and you have the stop loss. Absolutely vital when you're trading short term. If you want a deposit bonus on Bybit, check the link down below. You can get a $30,000 deposit bonus on there if you're new. Just click the link for the details. That is how you actually go ahead and enter some orders using the volume profile.